Okay, so it is Friday, February 13th, 2026. And looking at the pre-market numbers, it really feels like the markets are leaning into that whole Friday the 13th thing.
Yeah, they really
We're
are.
seeing violent swings already, and my coffee isn't even brewed yet.
It's a very messy morning. So we've pulled our data from the usual places, investing.com, stock analysis,
Yeah,
economic calendars.
right.
And our mission today is really to figure out if all this pre-market chaos is just, noise, or if it's some kind of crystal ball for the rest of the trading day.
Well, the crystal ball seems to be flashing red and green at the same time. It feels like a completely split reality.
Oh, so?
You've got the broader tech sector just sort of melting down, but then you see these very specific companies like Rivian absolutely soaring.
Oh, Rivian is the story of the morning, for sure. The stock is up, what, roughly 21% in pre-market trading?
Which is just huge.
Yeah.
But we need to break this down for you. Rivian has been burning cash for years.
For years.
So the reason the market is throwing this parade for them today isn't just because they beat some earnings estimate. It's something bigger.
It is. It's because they achieved their first ever annual gross profit, $144 million.
And that's the key, right? The gross profit.
Exactly. This isn't net profit. They aren't, taking money to the bank just yet. But gross profit means they're finally selling their trucks for more than it costs to build the physical parts.
For an EV startup, that's everything. That's the survival metric.
It proves the business model isn't fundamentally broken.
Right, it's proof of concept. And it looks like they're doubling down on it. Their CEO, RJ Scaringe, is calling 2026 an inflection point.
He is. And they're guiding for up to 67,000 deliveries this year. That's a huge 60% jump over 2025.
Plus, they confirmed the R2 SUV is on track for the second quarter. That's their big play for the mass market.
Cheaper vehicle, yeah. It's meant to go head-to-head with Tesla's Model Y. Investors are buying the execution story here. They finally see a path to scale.
So Rivian is like the fundamental win of the day. But then you have to look at the other side, the speculative chaos.
You mean Moolec Science?
You can't ignore it. Ticker MLEC.
Hard to miss. It's up over 112% on just massive volume. Over 8 million shares traded before breakfast.
But that really highlights the danger of the pre-market, doesn't it?
It does.
You see a number like that and you think, lottery ticket, but that's just low liquidity volatility, isn't it? It's a trap.
It is. It's a trap for anyone who's inexperienced, for sure. It just shows how thin the trading is before the opening bell.
Okay, but it's not all chaos. You mentioned some other pockets of green.
We are seeing some sector-specific rallies, yeah. Chinese AI stocks are popping this morning, driven by news of new model releases that are supposedly set to rival U.S. tech.
Which makes the situation for U.S. tech even more interesting.
Mm-hmm.
Because while China, AI, and Rivian are green, the slump here in big tech is just plain ugly. Pinterest is down over 21%.
And Cisco is down around 12%.
12%.
And Cisco is really the bellwether here. When a networking giant like that drops 12%, it tends to drag the whole sector down with it. The Nasdaq is sliding about 2% right now.
This feels like more than just a couple of bad earnings reports, though. It feels like a bigger macroeconomic fear.
Well, everyone is staring at the calendar.
They're waiting for the CPI data.
That is the ghost haunting the machine today. The January Consumer Price Index is about to drop. The forecast is for 0.3% month over month.
And just to connect the dots for you listening, if that inflation number comes in hot, the Federal Reserve keeps interest rates high.
And high interest rates are kryptonite for tech stocks.
Exactly.
Tech stocks trade on the promise of future growth. High rates make that future growth less valuable today. That's why you see Cisco getting hammered, while Rivian, which is telling a very specific, we are fixing our factory right now story, is bucking the trend.
It's a fascinating disconnect. The pre-market can be a monolith where everything moves together. But today, it seems like execution actually matters.
Yeah, it really does. This is the first draft of the day's history. The NYSE bell rings at 9:30 a.m. to make things orderly, but this pre-market action is raw. It's telling you that traders are getting selective.
They aren't just buying tech as a concept anymore.
No, they're buying specific outcomes.
So here's the thought to take with you as the opening bell gets closer. We are seeing a massive rotation. You have software heavyweights slumping on inflation fears, while a company that makes tangible cars is popping 20% on production news.
It really forces you to ask the question. In 2026, is the easy money in pure software speculation finally over?
Are we seeing a rotation back into things you can actually touch? That is something to chew on. Thanks for diving into the numbers with us.
Anytime. See you next time.